Good afternoon, everybody, and welcome to another edition of MSATP TV. Joining us this morning is Jonathan Pocius with Payroll Services LLC, and he's here to talk to us about a new retirement program that's going into effect for payrolls in Maryland. So, Jonathan, why don't you introduce yourself and tell us a little bit about what's going on?
Great. Thanks, Bill. My name is Jonathan Pocius. I am the president of Payroll Services LLC. We're located in Frederick, Maryland, and we service customers all across the nation. We service about 20,000 employees in about 48 different states right now. And one of the things that we've always tried to do for MSA is to go ahead and give you guys updates on new regulations that are occurring in the space. Now, this regulation that's coming out is not new in the fact that it was actually passed 6 years ago. However, it is now being implemented, and Maryland small businesses are going to need to know about this. And even if you are an accountant processing payroll, there are going to be some significant changes to the way payroll is processed. One of the things Bill and I were talking about just off live here was payroll is no longer just running payroll. With these new regulations, we do foresee additional compliance on mandatory paid family leave, retirement program, which we're going to talk about today, and more. So let's just dive into what's going on right now. 6 years ago, Maryland passed something called the Maryland Saves Retirement Program. At that time, the idea was to implement a required savings program for businesses that employ employees. And what that means is even your single S Corp officers that have to run a payroll one time a year to comply with IRS requirements, they are considered employees. So this regulation even affects those employees and companies like S Corps. The Maryland Saves Retirement Program was really initially set up to do two things. One, make a mandatory employee contribution, and they were going to mandate an employer contribution. In the legislation that passed, the employer contribution did get struck from the legislation. However, the mandatory employee contribution did survive in there. COVID happened and everything kind of fell by the wayside as the nation was dealing with COVID. Now, 6 years later, Maryland Saves is revamping this. So what we want to do is kind of give you a little bit of updates as to what this program means and how it works. So in a nutshell, states are now starting to scramble because they perceive that there is a retirement problem that's looming and pending for the nation. Whether you agree or not it doesn't matter, but lots of states are starting to do this. We're seeing it in California, we're seeing it in Oregon, in other different states. So Maryland Saves will require every single business in Maryland that has a minimum of one employee in Maryland to register with the Maryland Saves program. There is an exemption from the Maryland Saves program for participation if your business already offers a company-sponsored retirement plan. Okay, this cannot be that you are a one-person S Corp owner and you are doing retirement on the side outside of the business. It must be a company-sponsored plan. The business will then go into this Maryland Saves program and register. What that will do is ask you whether you have a plan in place, which would make you exempt. And if you don't have a plan in place, you will be required to do further additional administration. Maryland Saves will then link up with SDAT. Now, the good thing about this is all the businesses that do register currently will get a $300 credit to their annual PPT filing fee. So that is a plus for that. Now, upon registration, if your business does not support any type of retirement plan, a simple 403B, 401k, whatever the case is, you will be required to upload what we call a census file. A census file will contain a list of all the employee information that's currently in your system. And then Maryland Saves will reach out to those employees and basically try to enroll them into the program. Now, this is an automatic opt-in program. So as Maryland Saves goes ahead and reaches out to these employees, if the employees do not take any action, they will have a mandatory 5% withholding coming out of their check to go towards Maryland Saves. Now, Maryland Saves is what they did is they set up basically traditional Roth IRAs for everybody. So this is not like a company-sponsored plan. It is not a state-sponsored plan where the state's holding the money. This is actually a Roth IRA going to the employee. What will then happen is Maryland Saves will be communicating with the employers on these withholdings and these contributions. The employer will be required to withhold that money, remit it to Maryland Saves, as well as per payroll transactional data. Okay. That means you'll have to be reporting the contributions by employee. You'll also have to be communicating any type of new hires and things like that to Maryland Saves through this file. Your Maryland new hire reporting does not play a role in the Maryland Saves program. It's two completely separate programs here. Now, there are some problems that we see. The first one is most people do not respond well to opt-in programs, right? So if you opt in into a program and somebody doesn't do something, employers are going to get some backlash because 5% of their paycheck is going to be gone, and the employee is going to go, where did it go? Maryland is saying that they're estimating that they'll have about 60% participation rates. We'll have to see how that plays out with it. From an administrative standpoint, there are quite a few different things. The initial registration for clients is going to be a little bit tedious, especially if you have quite a bit of customers. Customers aren't going to understand what needs to happen with that. So uploading the initial data, getting all the census files, that is going to be a little bit tedious. Then the ongoing administration, which is remitting the payments, the payment file, as well as additional census information, does need to occur every single payroll. Throughout this time, you'll also have employees that will either opt in, opt out. So you'll be getting updates from Maryland Saves that you'll need to make these adjustments on the employees. If employees do reach the cap, they'll also get a notification, hopefully, that they've reached the cap. We've been working closely with Maryland Saves to help out businesses in Maryland with this, so that way we can offer them a more automated method of handling this. There are some problems that we're seeing. One of them right now is if an employee works two different jobs, they are going to basically be enrolled into this Maryland Saves program two different times, essentially. So the TPA that's handling this will know that the employee has capped out, but we're not sure how the communication is going to go back to the employers with this, because as you know, the Roth IRA limit is 6,000 plus catch up or whatever is changes to each year. So those are some concerns that we're looking at, and we're trying to work with them to deal with this. Right now, Maryland Saves wants to do a pilot program in June. Payroll Services is planning to participate with this, so we can give them feedback and try to help smooth out the process. And their goal is to start the required registrations and participation in September. From our understanding, they're going to do a phased in requirement. So what we believe is that they're going to start targeting the larger businesses first, and then it's going to trickle down. How that works, we're not really sure. Our plan here at Payroll Services is to go ahead and get everybody that we service registered come September, and then any new client that we onboard, we will also register immediately, so we know that that customer is in compliance. So we do see a lot of things coming down with this, a lot more administration, and a lot more oversight that's going to be needed with this plan.
If the employee is covered by another plan, but they choose not to do any payroll reduction, so the employee is not contributing to the plan, would they be required to contribute to this plan?
No, as of right now, the way that it works is as long as there's a company sponsored plan, the employer is exempt from Maryland Saves.
Okay.
And so therefore nothing will occur from Maryland Saves to the employee side. However, what we do foresee based on the way the legislation was written is we do expect to see mandatory payroll reductions by the employee at some point in time. And we do believe that we are going to see employer mandated contributions at a point in time.
Okay. And since this money is going to a Roth account, it would not be tax deductible to the employee.
That's correct.
Of course, the earnings on it wouldn't be taxable to them sometime in the future either.
That's correct.
But so they're not going to see any significant savings in their taxes for putting this money away on the short term.
That's correct. There's no pre-tax savings on the deduction itself. So, any earnings will basically be non-taxable since it is a Roth. The question really comes that we've been talking to people is, does it make sense for a business to say, go out and get a simple IRA or deal with Maryland Saves? I would argue, since we've done this so often, The Maryland Saves program is going to be much easier for smaller businesses to deal with than dealing with like a simple IRA. One of the things, as a business puts into place a retirement program, the business does have educational requirements to give to the employee and things of that nature. And traditionally, simple IRAs, most financial planners don't necessarily service them the way that they would do a 401k because there's not as much money in there.
Right.
One average of 401k could cost a business $1,500 to $2,000 administration costs. With the Maryland Saves program, there's no fees. You're actually getting a $300 credit. So really, this is going to affect a lot of companies that are, restaurants, or maybe they are, home health care, which they typically don't do these retirement programs with. Any employee that's under the age of 18 is exempt. So you don't have to deal with that. Like if you run like an ice cream shop and most of your staff is under 18. However, that's kind of what we see with it. We do see that Maryland Saves and the legislation has been set up to try to make it a cost-effective way for employers. However, legislation can change at any time, and the board does have discretion to change contribution amounts. And we do believe they have discretion to change employer contribution amounts, but that's just, we don't know until it happens.
Right. So as things stand right now, there's no requirement for an employer contribution.
That's correct. There's no requirement as of today. The requirement is the employee contribution if they do not opt out.
Okay. And each employee can make that decision whether they want to opt out of the plan.
That's correct. So if the employee must take action in order to do something, so if the employee takes action, they can keep the deduction the same, they can increase it, or they can reduce it, or just say, nope, I don't want to do it. We do believe, though, if they see too many employees opting out, we will see a much more aggressive requirement.
Okay. Well, I personally think it's good for everybody to be saving money. I don't like where it's mandated, but I do think it's a good program.
Yeah, objectively, I believe that there is a retirement issue looming. And I do believe that the states are trying to get ahead of things in order to prevent the social problem later, right?
Right.
Something's got to give with it. And, I don't know about you, Bill, but I've always been taught from a young age, you start saving when you're young, right?
Right.
When you're saving for retirement, you start it young, not when you're later, because it helps out. And I think what we've seen in American society is there's a little bit of a different mindset as to what practically happens. And this law, I see somebody, Daniel, commenting it. This law affects employees in Maryland only right now. Okay. So if you are domiciled in Maryland, your business, or you have a work location in Maryland, you will have to register for Maryland Saves. However, if I have a remote employee working in Florida, that Florida employee is not included in this requirement.
Okay. So it's only the people who are domiciled in your state.
That's correct. Residents of Maryland are affected. So if you're working and living in Maryland, you are affected.
So if you're working in Maryland, physically working in Maryland, but you live in Pennsylvania.
Yeah, our understanding based on the rules is that Pennsylvania employee would not be required to participate. Okay.
But they can elect to participate.
That we don't know yet. Those are some of the things that they're still working out in how this process will work. Our understanding again is if the requirement is for Maryland residents that work inside Maryland. If you are a Maryland resident working in Virginia, it's not going to apply to you because that Virginia business is not required to partake in this.
Okay. That's an interesting concept. And if it's an elect out program, you think that you can elect in to become.
Well, it's an automatic opt-in. So you automatically are enrolled in the program as a Maryland employee. You have to take action to change or opt out of it at this point.
Okay. And how often do you have to send the census information to the state?
Yeah, so you'll have an initial census that goes out on the setup, and then every time you'll have to send additional census information. So there's essentially two files that will need to go out on an ongoing basis, or you'll need to go into their portal and update it, which is the employee contribution that happened during that pay period. And then
Right.
they will draft the employer those funds, as well as an employee census file, which tells them if there's any new employees that are on there.
Okay. So if the Maryland employee opts out of the program, can later in the year or the following year, can they opt back in?
That's correct. Yes. And the employee would have to initiate that.
Okay. So is it an annual type thing, or they can do it whenever they want?
From our understanding, they can go in and change it whenever they want.
Okay. And the employer is required to withhold it and remit it every week.
That's correct. It works just like a standard retirement contribution. You know, if you have a 401k and withhold $50, the employer's got to pay that $50 in.
Right.
Yeah. The one thing
Okay.
I do want to caution on this is we speak to a lot of accountants, and we have some account clients call us that are processing after the fact payroll. This is going to be a problem. After the fact payroll, you should not be partaking in after the fact payroll anymore because of all these different nuances. We had a customer that reported his entire year of payroll at the end of the year after the fact. Well, with Maryland Saves, those employees, there is going to be some type of penalty because you're not contributing this. Typically with like a 401k, there is a time period where the employer has to make those employee contributions without getting penalized. We
Right.
do foresee that this is going to be the same thing. So if anybody's doing after the fact payroll or have clients that are doing that, you need to stop. Even for these S Corp owners, it is going to be problematic because most of these S Corps, a lot of them that we see don't actually have retirement plans in there. We would say probably about 30% of them have a retirement plan and the other 70 don't. They're just
Right.
doing it for IRS purposes.
Right. It's very interesting stuff. I can see this creating a lot of heartaches for people who are in the payroll prep business.
Oh, we're excited.
Yeah, I know, but I'm thinking about some of our small accountants who do a couple payrolls for their clients. This is going to become a nightmare for them to
Yeah,
keep track of.
that's a great point. And one of the things that we've seen kind of moving is we've worked with a lot of different accountants in MSA and other ones that we actually handle their clients' payrolls for them. And they are, we basically take care of the back end of the house, and then they simply report ours, the front end.
Right.
Obviously, I'm a little biased because I run a workforce management company, but I do believe payroll is not something that accountants should be messing with anymore. There's just way too much stuff that's going on right now that is just, it's not worth it anymore. It's just really not worth it. Like if I were to start off, Bill, you and I were talking about this. If I wanted to go out and do a CPA firm, I would never do a payroll company with it ever. And this is coming from a guy running a payroll company. It's very, very different processes and things that need to go up. And ultimately, one of the issues that we see is a lot of times accountants that are processing payroll, they have clients that don't like to follow the rules, and the accountant is left scrambling to try to make the customer happy. That's where you're going to get in a pinch. And I would be very careful with it because there's more reporting requirements coming down the road with this, and there's actually new regulation that's falling on payroll reporting agents. So for us, is it really worth to have this headache anymore? If you're running, especially if you're running 10 customers, is it really worth it? And I know the biggest concern for most accountants is if they're doing monthly bookkeeping included, are they going to lose that customer? The answers are 95% of the ones we've seen. The answer is no. It doesn't ever happen.
Okay. As far as the timing for this starts June 1st or July 1st?
So June starts the pilot program, and then the required enrollments, they plan to start in September of this year.
Okay.
So they're going to do like a 3-month pilot program. Payroll Services is planning to participate in that pilot program so we can try to help create a good, smooth process for things. Like, so
Sure.
we've been in discussions with the executive director. We've been in discussions with their administrative team that's actually handling the tech side of things. And so we've kind of raised some questions and concerns about how this is going to work and some things that are there.
Sure.
But there is a model for this already. Like I said, you have Cal saves, you have Oregon saves and things like that. So there is a model. So we do expect this to be fairly smooth as far as how it would work. The big question comes is, and this was my objection to them. Most small business owners, they don't even log in to get their Maryland unemployment rates.
Right.
So to add
Exactly.
this additional level of administration that is not a one-time thing, but it's an every payroll thing, they're going to start needing it. So, and this falls for your same customers that are going through Gusto, Sure Payroll, stuff like that. And what I would advise accountants is to watch out for predatory sales right now. I won't name the companies. Y'all probably know them, but they're big name companies and they are pushing the snot out of selling 401ks to businesses, small businesses. And, a 401k through these big name companies can cost them $3,000 to $4,000 administration, and they may have 2 employees on the thing. There's better cost-effective ways of handling it. So we have seen more predatory sales, and it was interesting when we did talk to Maryland Save's board of executive director. He did mention that some of these companies were preemptively marketing this. So just be careful out there.
All right. Are there going to be any top-heavy rules on this?
It's just a straight Roth, traditional Roth. So it's an individual Roth. So there's not going to be any top-heavy rules or anything like that.
Okay, so there's no testing and things like that are going to be required on it.
Nope. There's nothing. There's no discrimination testing or anything.
Okay. All right. Well, thank you very much for joining us today.
Absolutely.
It's a lot of good information, and I hope people will pay attention and turn over their payrolls to a company that can handle the new administrative kickback on this.
Yep. And like I said, we're starting to do it all in September. We're just going to make sure our clients are, that box is checked and they don't have to deal with it. And also they'll get the $300 credit next year for their PPT filings.
Right. Very good. Well, thank you very much, Jonathan. I appreciate it. And I'm sure our members do as well.
Absolutely. Thanks, Bill.
Yeah. Have a good week.